Hi everyone. In this video, I'm going to talk about a very specific component of companies' annual reports, and that is the Auditor's Report. This is one piece of the annual report that actually isn't prepared by the company itself. It's prepared by the company's auditor and included by the company in the annual report. So, the Auditor's Report, what purpose does it serve? Well, every publicly traded company is required to have their financial information audited for accuracy and before releasing it to the general public. And so the Auditor's Report is kind of exactly what it sounds like. When the auditor is done looking over those financials, they write up a statement saying whether or not those financials are reliable, in essence. And so just to help you with some of the terminology that you'll likely see in an auditor's report. And as I say, prevents the independent auditor's opinion. Remember, these auditors don't work for the company. These auditors are independent auditors that come in and review the financials. It's the auditor's opinion as to whether the company's financial position, in other words, its balance sheet, and results of operations, or its income statement, right? If we think about this in terms of financials, balance sheet, income statement, are presented fairly. And that phrase, presented fairly, it's an odd phrase, but when you think about it, really all it means is correctly. Okay? The other thing that it says is whether or not the company's financial information was recorded and reported. That's accounting in essence, right? Recording and reporting of financial data in conformance with generally accepted accounting principles. That's our US GAAP. And so what this is telling you is, hey, if you did this, then that means that your accounting is reliable. Right? That's essentially what it's telling you. They followed the rules. They did the accounting the way they were supposed to do it. You can rely on these financial statements. Okay? Now, your auditor, I mentioned already, has to be independent of the company. It can't be someone that could be influenced by the company to give a favorable outcome if one isn't deserved. Something else that makes auditors unique is only CPAs, certified public accountants, are allowed to perform the independent audit, okay? So there's plenty of accountants out there, and many of those accountants work within a company doing the books, so forth and so on. But auditors have to have special licensure. Auditors have to be certified public accountants in order to complete the independent audit. That's it for the Auditor's Report. So hopefully you found this helpful, and I'll see you in the next video.